And joining me now is Kathy Boyle, president and founder of Chapin Hill Advisors. Kathy, good to have you with us. Thanks so much for coming in.
Great to be here.
So you say, all right, there's a disconnect right now between Wall Street and Main Street. I mean, isn't there always kind of a disconnect?
No, I think this is really more enhanced. There's been a disconnect for a while. What we see walking in the door with increased short sales, more foreclosures, people getting laid off, companies not having access to capital, and then the hoopla around the stock market is just a disconnect. And I don't think it's going to continue. We're still bearish. We're still worried. Everybody's a technician. Everybody's watching these levels. Everybody's thinking, oh, 1118, 1120, we break that, we go to 1140, 1150. That's only about 2% from here. And then we could be setting ourselves up for a big fall.
All right, but before we get to that potential big fall, the market just seems to want to grind higher. Is there just so much money on the sidelines, as people describe it, waiting to come in?
I think there certainly is a lot of money, and you might see rotation because, you know, gold's down to 7-8%. Where'd that money go? Maybe some of that went into stocks, some of that went into the dollar. So I think you'll see that rotation. But right now, I think hedge funds managers want to get to the end of the year with the returns they have. So everybody's just trying to keep it even, keep it even. Let's just get to the end of the year.
What about the U.S. dollar? Big surprise of this dollar turnaround?
No, I don't think so. I think, you know, fundamentally long term, we're not really bullish on the dollar, but I think short term, absolutely, there's going to be some dollar strength. It's been too weak, too long.
What about when you take a look at things like a falling price in gold? Does that mean that it gives you an opportunity to get in? Would you like to be long gold?
We do want to be long gold. Long term, we love gold. Short term, I think there's still some more possibility of some pain. If it goes below 100 on GLD, 1,000 on gold itself, then it could fall further. If it stays in this range between 1050, 1060, and 1,000, somewhere in there, you could start to nibble on it. But one of the tellers at the bank yesterday was telling my portfolio manager about a gold stock his father's friend told him about. When we've got bank tellers buying gold stocks and everybody talking about it, I think it's a little bit of a craze.
What about what's going on with the financial industry right now? You say take a look at the financial sector, how it's performing in the stock market, because that could be a harbinger of things to come. Yeah,
if you look, the financials turned around first. You know, look where Goldman was back in March. Bank of America, $3. You know, you could have gotten, everybody looks back and says, oh, I should have bought Citi at $1, you know, to $4.
Woulda, shoulda, coulda.
Right, our favorite words. But right now, the financials have been lagging. JP Morgan and Goldman are down almost 20% each since September. That's a bit. Nobody really recognizes that. And XLF is the ETF for financials. Look at that. That chart looks like it's rolling over, coming down. The regional banks still are holding up a little bit, but no market rally has really ever taken place with a real strong rally without financials participating. So I think that's a warning sign.
What about, when you talk about rolling over, what about consumer staple stocks? Because you've taken a look there and you said there's some trouble.
Sure. You look at Colgate and Procter & Gamble, or KXI is the ETF for the consumer staples, and they all look like they've made a top. It might be short term. Maybe they'll make one more run up, but I think that's a sign. They ran up a lot. So I think they're all turning over right now, and there's either rotation happening, money coming out, or they're afraid of what next quarter is going to bring because we still have weak consumer spending.
When you say looking at the next quarter, I mean, when you look at the profits that are supposed to come in for the S&P 500 companies, do you think that analysts are going to have to raise their expectations to meet the profits, or you don't think the profits are going to come in anywhere near?
I personally don't think the profits are going to come in. I mean, we looked at Barron's this weekend, and every single analyst is bullish. The most conservative analysts looking for 1150 for the end of next year. Some of them are looking for 1350, which is a big move from 1100 here. So I think their expectations are too high, and I think everybody's still trading on hope. Hope that the stimulus is going to continue with the government until real spending takes place from the consumer and companies. And everything we see just says it's just not happening yet. Everybody's worried.
Did you wait in cash?
Cash is not a bad place to be. The thing about cash is you can't concentrate on the return. It's there for a reason. Safe. Stay. Don't worry about the return. It's temporary parking place. All right.